are now. Thanks for the reminder. That was Lee Madera, also from CPI. And the reason why we're doing this webinar, as many of you know, is that Lee's role, and she'll take over in a moment, is to figure out better ways to support our lab proponents to make sure they're successful. And one of the pieces of feedback that lab proponents gave us was that we want more opportunities to learn from each other. So we thought we would kick off a webinar series, and this is the very first one. We are going to have about 25 minutes of presentation, and then we're going to have a lot of time for Q&A. We encourage everyone to use the Q&A function in the Zoom webinar, and please hold off on questions until the end when we left time for Q&A. We'd like to encourage feedback on not only this webinar, but other webinars that you have. So as you're thinking about this webinar and participating in it, let us know what you think. And we would love other ideas. We will circle back after the webinar with a recording and other information about next steps for our lab alumni program. With regard to the Q&A, we just want to remind people it should be focused on general questions that are applicable to everyone. This is not a demo day or a Shark Tank, so please don't pitch Adam and Aditi on your specific ideas, but this is just more general information about the grant making process. So with that, I will turn it over to Lee Madera from CPI.
Great, thanks so much, Rob. Thanks everyone for joining, and a big thanks to Adam and Aditi for joining us today. So we're going to start out with a really quick intro that I'm going to do, and then I'm going to pass it over to Adam and Aditi for funders' perspective. And then we have some fellow proponents who have received grants who are going to speak a little bit at the end about their perspective and the process that they went through, and then we'll open it up for Q&A, as Rob said. Please, you can submit your questions throughout the whole webinar, and then if there's something that's a clarifying question, we can always interrupt Adam and Aditi and ask it in the middle of the webinar, but more of the content type questions we'll save until the end. But please feel free to submit them throughout the webinar so that we can organize them as they come in. So as Rob mentioned, we are both here from CPI and here to support different but complementary parts of your process as a proponent. We are all working on communications, alumni engagement, and investor engagement. Rob more on the communications and alumni engagement side, and then myself more on the alumni engagement and the investor engagement side. So if you don't already know us, it's great to meet you, great to have you. Here is our contact information. We'll be sharing the slides after the webinar as well. So please feel free to get in touch, as Rob mentioned, with ideas for new webinars and feedback on this one as well. So before I hand it over to Adam and Aditi, I just wanted to do a very quick landscape and overview of grant fundraising for you all. So the reason why we're here today is because grant fundraising is a really great option and a crucial funding source for just about all of our lab instruments. And I think that's for a few reasons. The first being that they're free and non-dilutive. So unless it's a recoverable grant, the funds do not have to be repaid and will not dilute your ownership or any investor returns. Another point is that the objectives of the grants and the grant makers are usually very aligned with yours as impact entrepreneurs. You won't be pushed to grow too fast or pursue profits over impact, which sometimes can be a risk with investment. And then finally, grants are increasingly available for all corporate forms, not just nonprofits, which is great to see. But that's not to say that grants are always the right choice. In fact, grants often have long lead times, long applications. They can have really robust reporting requirements and can be pretty hard to come by, which I'm sure many of you know too well in your own endeavors. So because of those benefits, but also limitations of grants, it's really important to plan ahead. And that starts with targeting the right funders. So make sure you look at the funders' focus areas, what sectors they invest in, and ticket sizes, and make sure that that aligns with what you're offering and what you're looking for. You also want to make everything you can do to make a compelling application. Ideally, you can build a relationship with the grant maker ahead of time, and that's something that Adam and Aditi will be able to shed some light on as well. And then finally, you want to make sure that you're well prepared. Grants, like I said, can have long lead times, reporting requirements. Sometimes they have requirements for matching funds. So it's always good to plan for that ahead of time.
Hey, Lee,
and then before I hand it over, yeah.
This is Rob Kahn. I don't think your slides are advancing for at least some of the participants.
Oh, okay. Let me, what slide is it on now?
Just the introduction slide.
Still the introduction slide. Okay, I'm gonna stop the share and then restart it.
Okay.
Okay, what do you see now?
Yeah, the common sources. Yeah.
Okay, and what about now?
Yes.
Okay, great. So just because we made very pretty slides, so I'd like you all to see them. Benefits of grant capital that I just talked about, some of the ways to plan ahead, including targeting funders, making a compelling application, and planning ahead. And then finally, the common sources of grant capital. So there are lots of different sources that provide grants. These are the ones that we think are going to be most relevant for you all as lab instruments. So we have foundations that includes groups like the Rockefeller Foundation, of course. We have state and federal governments, the Australian government, the Dutch government, the German government. We also have DFIs like GIZ and IFAD. We have multilateral funds like GCF and the GEF. And then finally, prizes and funding networks, and that would include Convergence, which is where Aditi is joining us from. And just to note that all of these funders, all these logos on this slide, are either funders of lab instruments or supporters and funders of the lab. So if you are just starting your grant process or you're looking for some fresh ideas, this is a really great group to start with, since they're all very familiar with and supportive of the lab. Okay, so I will stop taking up any more of your time and hand it over to the reason why you're all here today, and that is to hear from our grant making experts. We are really fortunate today to have with us Aditi Gupta, who's a manager at Convergence Blended Finance, where she's responsible for the design funding team, and also Adam Conacher, who's a principal at Rockefeller Foundation, where he works on the innovative finance team. And both Convergence and Rockefeller, and Aditi and Adam in particular, have been very key supporters and funders and partners of the lab for a while now. So and they're also very experienced grant makers. So we are really fortunate to have them here, and just want to give them both a big thank you for joining. So I will hand it off to Aditi, and let me know when you'd like me to change the slides.
Thanks for that introduction, Lee. As Lee mentioned, I manage the market acceleration and design funding work at Convergence. For those of you who may not be familiar with Convergence, I'll just start off with a quick introduction. Convergence is the global network for blended finance. We view blended finance as the use of catalytic capital from public or philanthropic sources to increase private sector investment in sustainable development. We have a global membership of over 200 members from the different stakeholders of blended finance. So that includes the public sector, the private sector, as well as the philanthropic sector. We produce data and intelligence, and we have the largest database of blended finance transactions in emerging markets with over 500 transactions that are accessible to our members. We have an online deal matchmaking platform that matches deal sponsors and investors for a blended finance transaction. This platform would be most relevant if you're at the stage of fundraising for permanent capital. And I can talk about that more later if there's interest. And finally, we have our market acceleration work, which brings us to the topic of this webinar today. So Lee, if you can move to the next slide. Under market acceleration, through our design funding program, we offer feasibility study and proof of concept study funding in the form of grants and repayable grants. The funding we provide is to be used for the design of a blended finance solution, and it's not for investment or operational capital. The reason we provide this funding is because we've identified that there's a gap in the market where there aren't enough bankable transactions aligned to the SDGs in emerging markets that are getting to market. And that's why we've launched this program to provide early stage support to teams, recognizing that these transactions can often be more risky and more complex to structure as compared to plain vanilla transactions. Over the past 4 years, we've supported 18 solutions so far that have gone on to raise over $600 million in capital after us. This includes lab instruments like the Green FIDIC by Albion Capital and the Pay As You Save by Clean Energy Works. Currently, Convergence has 2 funding windows open at the moment, focused on specific sectors in Asia. That's the Asia Natural Capital window funded by RS Group, and the Indo-Pacific Design Funding window funded by the Australian government. There's more information available on these windows on our website, and I'm also happy to answer any specific questions with respect to these windows during Q&A. With that, Lee, we can move on to the next slide. And I want to focus most of my comments today on some of the key points that we look for in grant applications. Of course, we have specific criteria on our website that you should look at if you're considering applying to one of our windows, but these are intended to be more general comments. The first one, which is actually really obvious, is alignment with eligibility and evaluation criteria, and Lee mentioned this as well. I would really encourage you, before you make an application, to see that there is a fit with the grantor's objectives. In our case, looking at the fact that there's a financing mechanism, what are the regions, what are the sectors are really important things. For example, if the list of eligible countries for a grantor excludes India, and a significant majority of your work is in India, and in your application you just state South Asia, that's not going to help you. So I would encourage transparency up front. The second thing we look for is a clear vehicle hypothesis. We really want to see whether sufficient groundwork has been done before an application is presented, and it's not just an idea out of a hat. So we want our applicants to have a very clear view of what the financing mechanism is that you want to launch and what all you need to test. I believe lab alumni have an advantage there because you've gone through the lab process and benefited from the technical support provided by the lab. The other thing we look for is additionality, and we are looking to catalyze capital that would be otherwise unavailable for that particular deal. Moving on, one thing which I think is really critical in grant funding applications is a candid assessment of the risk and the potential mitigation measures. There are going to be risks to reaching financial close for your particular financing mechanism. And if there weren't any risks, you probably won't need the kind of funding we offer in the first place. So the question for us is, are you aware of the potential hurdles? And if in your grant application you paint a very rosy picture of their financing mechanism, then that can leave the impression that you don't fully grasp the realities on the ground. So I think it's important to be quite frank and honest on that front. The other thing we look at is, what is the likelihood to reach financial close, and do you have buy-in from the different stakeholders? What we are really looking to fund is vehicles that are investable and that have the ability to raise capital. The funding, especially from Convergence, is not meant just to put out a report out there or a blueprint out there. So this is very important for us. We look at, do you have any anchor investors here? Have you engaged with the private sector? What type of commitments you have? And if you're very early on in the feasibility study stage, we recognize that you don't have hard commitments, but we want to see some engagement. And also, how likely are you to receive financial close in the near term? Typically, we look for a 6 to 18 month period in which we think you can close. Of course, development impact is really central to what we look at. And here, I think it's important to identify what is the development challenge that you are solving through your mechanism or vehicle. You don't need to be very general about this. So you don't need to explain to someone like Convergence why climate change is a problem. We recognize that's a problem, but what we would like to understand from you is within climate change, what is the specific issue that you're solving for? The other thing that we look for is the potential for field building. So we want to know how the mechanism that you're working on, how is it instructive for the broader market? Can it move the needle for the broader market? And I think that is one reason why we would support one financing mechanism over the other. Next is team. So team, of course, is really important, especially because we are supporting instruments at a really early stage. So we want to know what is motivating the team to go out and launch this vehicle. Does the team have skin in the game? Do you have relevant experience? We specifically also focus on the ground experience or partnerships on the ground if the team itself doesn't have on the ground experience. What is the structuring experience that the team might have, depending on really what the instrument is. And if there's a gap in the experience of the team, we want to know that you recognize that gap and how will you solve for it. And it could be, hiring a consultant on a short-term basis if that's what's needed. And finally, we of course look at how you're going to use the grant proceeds. And I think that's important for us because we want to know how you're using the money and does it get you to the next stage. So if you need co-financing to get to the next stage and our grant is not going to be sufficient, have you identified a source for it? So again, it comes back to the idea that grantors want to make sure that when they are supporting a vehicle, that vehicle is not left hanging, and this goes to that point. So with that, I will stop here and leave more time for questions. Lee, was there something that came up during my chat which I should be answering right now?
Nope, no, nothing in particular. So we'll hold any other questions for Adam's session or during the end as well.
It's a good time to point out, people, you don't have to wait until the end to submit the questions. If you have a question now, please submit them through the Q&A function.
With that, I'll pass it on to Adam from Rockefeller Foundation.
Awesome. Thanks, Aditi. I appreciate those comments. So I'm Adam Conacher. I've been at the foundation going on 6 years at this point, and in that time I've spent the entire time working on our innovative finance portfolio. Today I manage the grant portfolio, which includes about 50 active projects and then a number of field building and other grants that support the sort of ecosystem around those projects. And largely also thinking about sort of next step for our grantees. So it's not so much about just getting a new project in and thinking about what are the most interesting innovative vehicles, but also how do we scale them and get through the next phase. So my work splits sort of roughly 50-50 between those two tasks, if you will. I'll give you a quick overview today just on terms of what it is that we have been funding, what it is that we are funding, who we are and where we sit in the organization. I'll go fast. And then, just some broad advice and challenges we've seen in the proposals that have come through. And maybe just to caveat it, like Aditi, we evaluate a lot of proposals every year. And I always say that, I'd probably look at somewhere between 100 and 200 projects in a given year. So we've seen a lot, and there is really sort of a lot of, very simple things that I think hold these projects up, and we can tell you sort of what are the most common reasons we say no, or what are the most common reasons we say yes, which is probably even more interesting in some ways. But just to start with Rockefeller. So Rockefeller, if you don't know it, it's over 100 years old as a foundation. It's got an endowment around $4.5 billion, which ultimately means that we give away in grant funding each year somewhere between 175 and 200 plus $200+ million. The innovative finance team is one of the sort of many teams that sit under that umbrella. There's sort of 4 core programmatic areas of the foundation, which are going to be, advancing health, and that's largely a precision public health and data play. We've got equity, economic opportunity in the United States, so really thinking about urban working poor and how do we advance livelihoods on that front. We work on energy access in emerging markets. That's been mostly focused on India to date, but it looks also at sub-Saharan Africa for future challenges. And then we've got, foods. Totally blanking on my own programs here. Then we've got sort of a food and really thinking about food security globally and more important challenges around nutrition and getting good food through the system as opposed to just growing more. So those are the 4 core programmatic areas. Most of the foundation is oriented around those. There are 2 teams of which I sit on that don't work in those silos necessarily, but do support those silos as well. And so one is data and technology and really thinking about what is it that data can do to advance our other causes. And then my team is obviously innovative finance, where we think about what role can capital markets play in bringing effectively scale to these challenges, right? Where we have solutions, how do we scale up those solutions? And so that's where we sit on the team. When I joined about 6 years ago is when we started, the grant funding window, which it's similar to Aditi's, window in the sense that we fund early stage R&D. We then fund follow-on support to get you through the launch phase, and increasingly are thinking about the investments that are needed beyond that. 5 years ago, we would have dedicated probably 95% of our budget to early stage R&D grant support. Today, we're putting more and more into the sort of investment phase that follows on from the grant support. So we're still doing grants, but we're also trying to really think through, what are the investments needed to properly launch these products and get them into the market. So that's a bit of where we stand on that sense. Our portfolio is a little bit unique, both within the foundation and more broadly, in that we don't have a geographic focus. We don't have an issue focus or even a product focus. We work across all asset types. We work across all geographies, and really try to advance basically where we think, capital markets or the field of finance has a unique role to play. So it's really about how do we deliver the best thinking for scalable, innovative financial products, and push them into market. When we judge sort of a proposal that's come through, there's many things that we're going to look at. We're going to look at the momentum you've garnered. We're going to look at its contribution in, an individual asset class and how is it going to launch? We're going to look at the team behind it, but there's really a few core ones that I think are above and beyond. So first and foremost, this is VC funding. We're going to look at the team. The team is critical to this project, and even the best ideas have no chance if the team isn't dedicated, if they're not the right people, in the right organization, that kind of thing. Second, we're going to look at the innovation. It's what contribution do you have to the field of finance, right? Is this new thinking or is this recycled thinking? Have we really gotten somewhere where we can say, listen, if this were to launch, there is something that others can learn and be inspired by that can help to grow the field and expand it in new directions. And then lastly, it's going to be scalability, right? We're not looking for products that can launch into $20 or $50 million funds. We really want things that we think can grow and over time raise billions of dollars. So we're looking for products that we think have that replication potential and really have, at least an idea of how the economics are going to pencil out to be a scalable product in the long run. And then lastly, and I say it, but it kind of goes without saying, is, it's a foundation. We have a charitable purpose. So all of these products have a high bar in terms of the impact that we think they can deliver on a day-to-day basis. And so we're not going to bend at all on that one. And I kind of leave it off. It's almost like we don't judge that one. It's gating, right? If you can't answer that question for sure, then we really don't have the ability to sort of advance the conversation. I'll give some sort of quick just advice. I'm going to run through these fast. I've got 6 or so here and then some other things. And then we can do a lot of this in the Q&A. I'm happy to answer any questions you have as well about how we evaluate, how we build these relationships, or even just what we're interested in and how we think things are, what's exciting. But, in terms of advice that I would give anyone pitching a foundation or ourselves certainly is, first and foremost, keep it simple and bring us along slow. These are all going to be new areas to us. My portfolio is all geographies, all asset classes, and all issue areas, which means I'm not going to be an expert in anything that you're pitching most likely. I will have been on the periphery. I will have seen it. If you're pitching, an insurance-linked securities product, we've looked at that space before. We do know a little bit about that space, but I don't work in it day to day. And so the biggest mistake that I see from people pitching for funding, especially on the grant side, is, this sort of move quick and get a lot of information on the table and really try to present and demonstrate the knowledge. And I think It's something that you actually see if you read from a VC, VC funder's perspective as well, is this concept of sort of, you're the entrepreneur, you have way more information than I do, and it's really difficult to make sure you're keeping me in lockstep with you as you go. And so, keep it simple, bring me along slowly, and remember that at the end of this, I have to be the one that pitches it internally. So you have to arm me with the information I need, and I've got to be able to learn and take the class basically on the concept. Second one is that, every foundation or donor is going to be different, and there really is a need to tailor these pitches. And this annoys me as well, and I totally get it, but it's one of these things where the pressures internally are never going to let me sort of line up and just say everyone's doing it, and this is how foundations look at the space. So, for Rockefeller, scale is the thing that matters. Your approach to capital markets, what you bring in that sense. We also totally respect and will use blended vehicles in a lot of the products that we've got, but it's got to have a sustainable long-term perspective. We don't want to be subsidizing this down the road. We don't see ourselves as having the ability to subsidize most of these products. And so it really is thinking about, what does grant funding get you to and whatnot. But again, if you went to another foundation, some of them don't have that capital markets bend in the same way. They don't require the product to be so commercial as it grows in the market. And I have plenty of peers who I think are really, really intelligent and doing incredible work, and they love to fund the subsidy layer. They love to think more about, community-centric finance or something like that. And it's just, you really have to know what foundation you're pitching to. And I think, I would just say, Lee and Aditi both mentioned this before, but for me, it goes above and beyond just knowing, for example, that we're in energy access, but to know what Rockefeller's thesis on energy access is. And you don't have to know it coming in, but you can ask us that and really get a sense for how we view that market, if that's how you want to pitch the foundation. Third piece of advice is, this is VC funding or even angel investing at times, especially on the grant side. So keep that in mind when you come in. And for me, it's a little bit of like this balance of, you have to dream big, right? You have to show us a big vision, but you also do not have to show us that it's completely achievable. You have to show us what steps you can take to test the vision. So it's like this mix of dream big and show practical steps. And then also, just to reiterate again, and not to harp on this too much, but in VC funding, the team is critical. We're going to be evaluating you as the ability to pull this off as well. And that's a really important step, because none of these projects are going to go as we planned. And not a single one in my portfolio of 50 has ever gone, as we wrote out the grant agreement originally. They all take longer, they take turns and twists, and it all comes down to the team's ability to adapt. The fourth one, and this goes a little bit in line with this idea of every foundation is different, but there's a need to beware, I would say, of, I don't know if they're called ideological lines or just background of the foundation, but you need to understand the foundation's stance on some key things when you go in. So like, again, for Rockefeller, we're looking for commercial vehicles, completely commercial. We want full market returns, and we want you to have a target for how this thing could potentially bring in pension capital or something like that down the road. Other foundations are not going to have the same perspective, and we have co-funded with those foundations. So you do not need to have the same pitch for every foundation, but you do need to understand what makes them tick going in, and you can get that information, I think, as you build the relationship. You can ask us those types of questions. You can feel that out. You can ask us about our peers. We'll tell you, what we think some of the other great peers are doing, and how they would approach the same question. So I would constantly be asking for where these foundations land on, commercial versus subsidy, on scale versus, really unique, even on impact. I mean, this is one I've seen in the space. Like, Rockefeller considers itself a deep impact investor, all these kinds of things. We view impact and what's needed to deliver impact different than our peers, the other big foundations who we sit on panels with all the time. And so it's like, you really want to get a sense for how we view these vehicles and what we want out of them and where they're headed. And I think it will help a lot as you then begin to tailor and prep the pitch for us. Also know that we talk to everyone, right? We're funders, and so we tend to get all the pitches. And so if you are pitching in a space where there's a lot of activity, it's useful on the front end as you go in with those lines to know that we've probably heard other pitches, and you want to recognize that and differentiate yourself from those pitches, or take them head on, right? Tell them this is what else you probably are seeing, that kind of thing, because some of those pitches are probably building into our own background and views on the market. The next one's a little simpler. It's okay to follow up. One of the things I always say is, we've got effectively myself and now one other person that run the portfolio of 50, and also do some of the new partnerships that we're doing around distribution channels for scaling and investor engagement and all this kind of stuff. And all that's to say is it's not enough people. So if you're not getting a response at all, it's totally fine to follow up in 2 weeks and 2 weeks and 2 weeks again, or whatever the right time is, and ask for that response, because One, I'm not offended by it in any way, and I promise you that if I'm not responding, it has nothing to do with the project. More so, it's that we're completely underwater almost all the time. And then lastly, you know, this sort of goes in line. All of these projects are being pitched at a very early stage to me from grant funding. And so there's this question around long-term sustainability. And it really is important, I think, to address this up front and think about where might the fees come from? What might this look like in the long term? And how does this organization pivot away from an institution like ours? The problem that, you know, that we have internally is if you were to pitch for funding and get aligned, for example, with the health team, you know, they will make multi-year partnerships. They'll give you 3-year, 5-year funding, or 1-year funding, but many, many times over, because they pick a few select partners and they run in the long term with those partners. Our team is an innovation unit, which means that we tend to have lots of partners and we do one-off projects. So we don't have the ability to stay with an organization quite as long as we would like to. And so it really is important for you to sort of, at least at the beginning, be saying, listen, you know, this is what we want the grant funding to achieve for us. This is how we get there. We may need a little more funding, but ultimately where we're headed is X, right? And we think that we can get fees along this line, or this is how we'll pay for more of these projects going forward. So there's that. I want to give sort of 3 really quick, and then Lee, I promise I'll stop so we can get to Q&A. I want to give sort of 3 really quick sort of what have we learned in the sort of R&D grants that we've funded to date. And again, this is high level, and I'm happy to dig in or more. This is actually probably a list of 50 that we could generate, but maybe just 3 or 4 now. One is that they take longer than anticipated. These products are always, you know, we'll get proponents or grantees that pitch us for 9 months or 12 months of funding, and they're going to go to market. And they're oftentimes even coming from finance backgrounds, and they're thinking this is what it usually takes to get a product like this through. And my advice is that double everything. None of it takes that amount of time. The impact space is totally different. I was on a call yesterday actually with, with Convergence was on as well, but with Global Affairs Canada and with a number of folks talking about sort of the research that was done at Wharton, and with 18 East Capital talking about you know, the differences in the impact space. And they'll tell you it takes nearly 2 to 3 times longer to raise an impact product. The legal documents are infinitely longer than you can imagine. It takes more words to say the same thing because the actors are just totally different. And if you're raising DFI funding, they all want different things, but they want to be in the same vehicle. So anyway, my point is that these take longer, and you're trying to build a new product into the market. You're trying to introduce concepts, and that, you know, that momentum building effort shouldn't be understated. Next is good ideas fail for lots of reasons. And I think this market now will teach us that all over again. But we've had lots of products that I think are fantastic. And I can give you probably 10 different reasons why they failed that are not the product is at its core, I don't think, a failure. They fail for lots and lots of reasons, which come down to the moment in time. They come down to, you know, the proponent and their ability to connect with certain folks. They come down to previously, you know, cemented positions that folks have taken. They come down to a lot of things that prevent good ideas from going forward. And so you really need to be constantly aware that, you know, this is what's happening, and your ability to pivot is almost more important than your ability to sort of drive an idea forward. And then, you know, lastly, and this is what I think we're learning in real time right now, is that scaling is probably the hardest part of this. R&D feels like the hardest part, but that's the ideation phase. You're putting out a product, you're trying to get to pilot. Going from pilot to scale is the most difficult challenge we've faced. And we can talk later if it's interesting about, you know, right now my job is to build those channels, to really think through what does scaling look like. And we're doing tons and tons of exploratory grants and investments to try and do that right now, to provide different types of support, to build new institutions, all that kind of stuff. But scaling is difficult. And whatnot. So let me pause there. I don't want to go too long on this because I really do want to get into Q&A, but lots of thoughts. And, you know, like I said, I'm happy to talk through. Lee, you had asked about DFIs versus foundations. We can go into that. I've got stuff. We can talk about, you know, who else in the space, challenges with the proposals, or whatever's interesting. But let me stop there.
Rob, are you going to introduce Jay and Romas?
Sure. And thank you, Adam. That was, I was typing notes furiously. That was great. So now we're going to hear from 2 lab proponents, Jay Ko, who is a proponent of craft, and Romas Garbillo. Romas, I apologize for garbling your name, Garbaliuskas. And they've been with the lab for a while. And we wanted to give them an opportunity to give their perspective as proponents on some of the opportunities and hurdles in this stage of fundraising. So Jay, why don't you go first?
Great, thank you guys very much. It's great to see folks like Conservation International, obviously our friends from CPI and Rockefeller Foundation and Convergence as well here. A couple of quick things. We'll just talk a little bit about our experience in different parts of this universe on the accelerator incubator side and the grant side, and then I'll just give 3 suggestions on a practical standpoint for proponents. So we won the GLAB competition back in 2016 and received endorsement in 2017 from all the lab members after a really useful refinement of the concept process, which didn't come with any specific financial support, which we've been big proponents of having allocated to the lab, but was an important factor in sort of really kind of developing the project and the process. And obviously Rockefeller's instrumental in supporting the lab over time. We also won the International Climate Finance Accelerator competition in 2018 as the ambassadorial award there. I think we're a little bit too advanced to receive some of the soft loan funding that they had there, but that's something else to kind of consider. And then probably most importantly, we were the recipient of about $1.6 million in launch funding in form of grants from the Nordic Development Fund, which has been mentioned previously, as well as the Global Environment Facility. And happily, Romas at Conservation International is also one of our partners in the GEF funding as the implementing agency for the GEF. So we've seen over time different stages, and I think one thing that's important to think about, and that CPI might be able to follow up with, we're happy to give you our perspective, is that there are different entities that provide support at different stages of the development of your project and process. So in the ideation phase and the kind of refinement of concept, I think the lab has been an excellent incubator. In that sense, I think the accelerator project at ICFA, where they provide you with support to actually engage with service providers on legal documentation, on accounting, on fund management, these kinds of things, that's a very specialized kind of activity. And then the grant support in the middle, where you have, in our case, Conservation International and the GEF and the Nordic Development Fund supporting us through the kind of launch phase is what kept us alive through 2018 and 2019. And I would say without the support of the NDF, in particular, and the Global Environment Facility, as well as CI, there's absolutely very little chance that we would have been able to get to first close, which we achieved last December. So what are our suggestions in this process? I think very practically speaking, there are 3 of them. The first is know which stage and which entity is appropriate to engage with at those different stages. So obviously the lab support that you've gotten so far is very useful in the development of the idea and the process and getting some socialization and engagement with the organizations that serve as sort of members of the lab itself and also the universe of folks that surround it. But as you kind of move into the kind of need for working capital and so on, you need to really kind of identify quickly who can provide what kind of support over what period of time. The second thing is find a champion. So I think a lot of what Adam was saying and Aditi as well is you really need to make that human connection with folks and get them to really understand what you're trying to do, how it aligns with their strategy. And those are the people that will actually help you get through what is a fairly complicated set of processes and one that's distinct for each type of grant that you're looking towards. So I think philanthropy can act very differently than different types of governments. I'd say that without the help of Conservation International in working through the GEF application process, that would have been impossible for us to get done. By contrast, the Nordic Development Fund, which is a very nimble and quick-moving organization, was the fastest and first funder of us in each of the stages of our development, at the kind of launch phase and at the actual investment phase as well. The third point there is you really need to very early on understand their process. So unfortunately, some of the government processes can take as long as 18 months to 24 months to gestate. So understanding where people are in their grant-making cycle, where they are in their approval cycle, and knowing exactly how to move through those steps is something that's very helpful to get up front and early on. And I would say, again, getting back to the champion point, someone that is familiar with your project and that can help you understand how to get through the process is sort of a critical element in doing that. So we were very lucky to work with CI in the processing of the GEF grant that we received. We were very happy to be able to engage with NDF, which is, again, a very lightweight, nimble staff, to very quickly get to through their initial grant process and then moving through their board approval process for the actual investments that they committed to in the craft vehicle. So it sounds really simplistic, but those are the three major suggestions we would have, which is figure out, it's horses for courses, which entity is the right one to engage at the right time. Find someone that's going to really help you at the organization. There's process here. And the third thing is really understand what their process is. The last thing I would just add as a final element is some of the things that actually move you forward through these processes may not be immediately obvious. So there are times when we have been pretty targeted and thoughtful in working with our partners in finding kind of catalytic events. So, announcements at the COP or announcements in major events where there's some kind of impetus or reason for folks to make decisions, whether they're on their grant cycle or have specific objectives to make announcements. These are the kind of things that might motivate grant funders or governments or other supporters in a way that's very different than commercial investors. So I'll stop there.
Yeah, that is great. Thank you so much, Jay. Very helpful insights. So Romas, over to you.
Great, thank you. Can everybody hear me?
Yes, I think so. I can.
Okay, great. Yeah, and thank you, Jay, for your presentation and for the kudos to CI. Thanks for CPI for organizing the webinar, and Aditi and Adam for your perspectives and your insights. I'm just going to give a bit of background. So CI is a large nature conservation organization. Two of our institutional priorities are addressing climate change and innovation in conservation finance and science. That is one of the reasons why we have been why we have actually applied to the lab twice, and we have successfully had 2 ideas endorsed by the lab. Both of our ideas were relatively early stage proof of concept ideas for natural capital investment. Even after lab endorsement, we did not have specific sites, specific revenue sources, or specific investors. We needed grant funding to develop a few pilots under the most favorable conditions and bring them to a point of being investment ready over approximately 18 to 24 months. The first project was Blue Energy, and that project we worked in complete partnership with the Nature Conservancy. And in particular, the person that I worked with was Justus Rappel, and I believe Justus is actually on the phone today. And the two of us were really the leading our institutions collectively to actually fundraise, and we successfully raised $1 million of grant funding for that project. And just one note in kind of talking about the team, sometimes I think what was really helpful in that project was the fact that early on, CI and TNC were kind of pursuing kind of similar ideas, and we decided to basically collaborate. And we both pretty much would have had the right people within our institutions to pull this off by ourselves, but we had a far deeper bench doing it together. And we actually, and there were various parts where we both could have actually done it, but certain parts of our institution were stronger and certain than others, and bringing together our teams actually really helped strengthen the team. Now, just quickly wanted to, I think a lot of what I had in my notes has already been covered, but I just want to maybe just kind of highlight a few things and just maybe 1 or 2 things could be slightly new insights. I just also wanted to recognize that, so what happened is that we raised $1 million in grant funding from 4 different sources. 2 of those were DFIs that were our lab members, and that CPI actually played an important role in introducing us to those 2 DFIs and their interest in our project. And through those 2 DFIs, we raised more than 50% of our $1 million fundraising target. Now, just a few things, a few of the kind of tips or suggestions on fundraising or insights, and some of these have already been covered. And I think I know this has already been spoken to by a few of the other presenters, but the importance of being flexible and adaptable depending on who your potential donor is. And so we'd all be, if as a loud proponent, all of our ideas clearly have a climate change angle to them, but they also have a lot of different impact themes. And some of these themes are going to be of greater interest to different donors. So they all have climate change, but some of them may actually have more of a natural capital theme. Some of them may have more of an economic development theme. And so it's important to stay consistent with your message, but tailor your message according to the donor and according to which theme resonates best with them. Geographies are also important. We had one of our donors had very specific geographical limitations, and priorities. And so we were able to basically look within both of our institutions, kind of our field work, and actually be able to explore piloting in the geographies that were of greatest interest to some of our donors. And also the importance of actually your project being at the right stage of development for the donor. And so sometimes if you actually pitch your idea and then you realize that that particular donor is looking for something perhaps a bit more developed, that will actually help you to prioritize the use of your own resources on where to advance your idea to best fit what that donor is looking for with respect to what stage they're looking to support a project in. There was some mention about the importance of finding the right champion within an institution, but also the right champion within a group of institutions. We had an anchor investor among our 2 European DFIs that actually helped us crowd in the other European DFI and also really helped facilitate due diligence. The one DFI really kind of piggybacked on the due diligence of the anchor one, and that really made things a bit easier. Look for interest beyond grant funding, of course. The institutions you're approaching to get grant funding from will probably also be interested in providing debt and equity investment in the pilot itself. And so kind of, but you can position that as well, you know, going to an institution and basically saying, this could be interesting for your debt and equity investments, but we also need some grant funding to actually further develop this idea to investment readiness. One other thing we found is that there may be more than one point of entry to any particular, especially large institution. A lot of DFIs or international financing institutions have a lot of different programs that could all have interest in your idea. And some of these programs may not even be talking to themselves that well. So you may actually talk to a particular program in a large institution, and they may not even they may not even point in the direction of speaking to one of their other programs. So it's just to do an exhaustive search within any large institution regarding different points of entry. And then a final point is just, you know, really I would emphasize taking the time to make sure that all of your communications, including your written communications, are of the greatest quality. This is a first, you know, this is your kind of your first kind of communications and engagement with these institutions is very often at the pitch stage. And if the quality of your pitch looks good, that speaks to, you know, the potential that the quality of all your work is going to be good. And I have, you know, we did have several circumstances where the DFI donors went out of their way basically to commend us on the quality of our written communications, which so obviously that indicated that was important to them. So I'll stop there. Thank you.
That's great, Romas, and those were helpful additional insights, so we appreciate that. People have been submitting a lot of questions through the Q&A function, so thank you for that. We've been tracking all of those, and as well as the questions that came in through chat. So Lee, do you want to start teeing up some of the top questions that we received?
Yes, definitely.
One more point. So we may not have time to get through all the questions, but we are noting all of the questions, and we'll try to follow up separately if we don't get time by the end of the webinar.
Yes, thank you, Rob, and thanks everyone for your questions and to our presenters. So Aditi and Adam, we've gotten a couple questions about eligibility criteria, where to find more information, what countries you fund. I would encourage everyone to check out the websites of both Convergence, of their design funding window, as well as Rockefeller. There's a lot of information there, and we will send those links along with the slides after. But in terms of what you can't find on the website, so Aditi, maybe in particular, upcoming windows that you guys are planning for, and Adam, given that you guys have a different fundraising process where you don't have those specific funding calls on the website, what is it, maybe we'll start with Aditi, what is it that our prospective grantees should know that isn't already on the website?
This is Aditi. From Convergence's perspective, just to give some context, initially we operated a global emerging markets window. So we were looking at instruments across emerging markets and across sustainable development goals. And that was a little bit similar to Rockefeller's approach. And that was supported by the government of Canada. That window is currently closed for the time being. We have 2 new windows that are supported by 2 different donors. So that's the Australian government and the RS Group, Both of those windows are focused on Asia. And if you go to our website, you can see the specific countries that they're focusing on, as well as the specific sectors. We anticipate that we would be launching at least one more window in this year, which is likely going to be on the nexus of climate and gender, and would have a more global focus, including Africa, but we're not able to give specific timelines at this moment.
Hey, okay, so maybe just a little bit of a quick, I think my own take on our website is that I think it is lacking in information. I think we put some stuff up there, but again, because we have a sort of informal process for review, you're not going to find, for example, a super clear, this is exactly how we operate through the process, or the things that we're going to look at. There's two things that I think we can do still, though. One is, you know, I'm happy to chat directly. So if you do have questions about a project that's up there, or how it fits into the portfolio, or what we're thinking about, you know, a certain space, because we've got 3 or 4 grantees looking at that space, you know, I would encourage you to reach out, and I'm totally happy to share, you know, informally via email, this is what we're thinking, this is what we liked about that project, and this is where they are, or introduce you to the grantees directly so you can go and, you know, connect with them and learn from them. The other thing is that all of our grantees are, well, all of our grants and investments are public goods, right? So everything that they're producing will be basically turned into a deliverable and made available. So if you want to know what is the blueprint for X, Y, and Z product that Rockefeller has funded, our grantee will have put together a blueprint doc. They will also probably put together other docs that are relevant to your ability to assess, you know, what they see as the market, why they addressed it the way they did, that kind of thing. So it all depends on where they are in terms of, you know, the process of developing that product, but certainly reach out, and I'm more than happy to share those, you know, with you. I also want to go back to, I mean, Jay mentioned the idea of a champion. My job is to be the champion as well. So if you have a product and you're not sure how it fits in, you know, you should share it with us. I review absolutely everything, even if it's, you know, a cursory 5-minute look because we don't think it's a fit. We will take a look. And if it is something that's there, you know, we can help fit it in. My job is to basically determine how to fit it to the strategy if it's a really good product. And then lastly, and maybe this is helpful, Lee, I can share this with you if you want to share it with the folks online, but you know, we have a Q&A document that we send out for all of our grants and or investments. And I can share those 2 documents, and you can see, here's the 11 first questions we're going to ask you for any of these products, right? And I wouldn't encourage you to fill them out without having a quick conversation with us, because it's a lot of work. But if you want to know, how do we frame the question? What are we looking for? It's all in those Q&A docs, and we don't publish those online. But again, the only reason is that we don't want folks to be unnecessarily filling out, you know, a 20-page proposal when there's no sort of alignment with the strategy. We'd love to have that conversation first and then have them come back to it. So, but I'm happy to share it if it's useful with the group.
That would be great. Thank you, Adam and DT. And yeah, we will, Rob and I will work on collecting that information, and we will send all of that out after the webinar along with the slides. So another question for both Adam and Aditi. What is your recommendation for applicants who are not selected for grants? Do you encourage repeat submissions? And if so, what are some ways that prospective applicants can improve their chances? Adam, maybe starting with you.
Sure. Yep. It's a little bit of a yes, I encourage repeat submissions, but under sort of specific context. You have to have something new. So if the grant has been rejected, you know, for one reason or another, and my hope is that in rejecting it, we're able to give you an answer as to, you know, clearly what that reason is. But you know, it's not something where we're looking for you to come back and tweak one thing and find something. You know, if we rejected and said, listen, there's not quite enough momentum and we can't take this process forward, we need some other partners at the table, and you find those partners, that's big change. You should come back to us at that point. If we tell you the product's not as innovative as we would like, and it's not quite meeting our bar, and it's not winning out, then, you know, that's an area where you would need to fundamentally have a totally different perspective on the product, right? That it's hard to sort of fix that piece. So I guess the broader piece of advice is, yes, absolutely can come back with resubmissions. And I would encourage you at a bare minimum just to stay in touch, right? We can learn and evolve our own thinking as we go. And it happens all the time that, you know, we will grow and learn as we see more projects in the market, as we go to more conferences and see how this stuff fits in. So, you know, absolutely stay in touch, keep us abreast. But I would not encourage a resubmission if you don't have a big change to report, right? If you haven't built momentum, if the product hasn't changed, or something is there that sort of changes and addresses the underlying fundamental reason why it was turned down in the first place.
I would echo most of what Adam has said. So we don't have a restriction on resubmissions. You can absolutely reapply to the next application cycle. We also accept applications on a rolling basis. But if you simply submit the same proposal again, it's unlikely that you will get further along in the process than you did the first time. But if there has been a significant update, a significant development, or you've been able to secure a little bit of funding from somewhere else to move the needle along, we definitely want to look at it again.
Great, thanks for that. And I know we're at time. I'm hopeful maybe Adam and Aditi, do you have a few minutes to stay on and take a couple more questions, or do you guys have to go? You have a few minutes?
No, I can run over a few minutes, yep.
Okay, thank you so much, appreciate it. So Aditi, Convergence has an open call for ideas. Rockefeller, you guys, as you said, Adam, have a more informal process. So Adam, how do prospective grantees get on your radar? And for Aditi, given how many submissions you probably receive, how can applicants make their idea stand out?
Yep, I can go first. The short answer is, the informal process is good and bad in two ways, right? So to get on our radar, you can email me, and one of the sort of things that's evolved in our portfolio and I'm proud of is that we fund from everywhere. So I've actually got 2 projects now in the portfolio that were cold calls off of LinkedIn, where they just submitted and said, listen, I'd love to have a conversation. Here's what I'm thinking. Now I literally get hundreds of LinkedIn variations of proposals. So it's not that we're funding at a super high rate, but we do take a look if you send it there. So now that's not the way I would recommend, email us. And more importantly, and this goes a little bit to, what I think Romus was saying as well around the champions are across organizations. If, you're backed by the lab, email us with the lab. That's a really, really great way to help us sort through on the front end and say, this is sort of a curated list, right? This is not the LinkedIn 1 out of 100 list. So that's what I would start, but don't hesitate. There's no reason not to send us a deck and say, is this the type of thing that might fit? And my only thing to say is when you do that, it's really helpful in the body of the email. Just give us a simple, this is what I'm trying to achieve. This is where I'm at. And this is what I really need Rockefeller to help me do. And it would be, that can be, I need $100,000. I need $500,000 of grant funding. I need an investment. Like, just lay it out for us. Or if you're not sure yet, if you want to have that conversation, you don't have to lay out a number. You can just say, we need resources to get to X phase. Like, the basics of the proposal to really help guide a conversation are helpful in getting us to then engage and respond back.
For us, our application process is a little bit more formal, but we do believe in an iterative process as well. So I would encourage applicants to make the full use of our application process. Initially, we ask that you submit a quick questionnaire through our website and schedule a call with us. That questionnaire should not take you more than 10 minutes to fill out. It's basic information. And when you schedule a call with us, it's basically helping us orient where you're coming from. And we will have calls with everybody who submits questionnaires as long as it's broadly related to the field of sustainable development and blended finance. And in that 30 minutes, we really help you to determine alignment. We also encourage all our applicants to submit draft proposals to us. And if you submit draft proposals to us at least 2 weeks in advance, we will get back to you with written feedback. So I think that's something I've seen not all applicants do, and I understand there are timing constraints, but I think that's a great opportunity to understand what we're looking for. And it may very well be that you have that information, but for some reason you've decided not to put it in the proposal. So I think following those steps and making the most use of us can be a really great way for applicants to stand out and also realize where the strengths and weaknesses of their proposal lie.
Thanks, Aditi. Yeah, definitely. Whenever there's an opportunity to get feedback from the funder, it's always a great option. So last question, and then we will follow up over email with any open questions. I'm impressed that we've made it over an hour without talking about coronavirus. I think this is a first for me in the last couple weeks. So before we wrap up, Adam and Aditi, do you see the current health crisis changing your funding priorities, or maybe the availability of funding and the amounts, or in any way? Basically, just how do you see the current crisis affecting or not affecting your work and what you fund?
Yeah, I don't know, Dee, I can start on that one too, unless you want to go. But the short answer is it's going to have enormous impacts on our portfolio and all the portfolios. I'm on calls quite frequently with other donors, with the DFI community, and right now all the calls, the agenda is basically how are we shifting our priorities and landscapes, and I can say that the shifts are big, right? And there's lots of it's an availability of capital question, it's a focus question, it's a resource, it's so many things. For Rockefeller specifically, 3 months ago, we did not have a coronavirus or COVID platform, and the health team was not working on it. Today, we have a $50 million program plus $10 million investment facility, which are being dedicated to that. We only give out, like I said, 175, maybe 200 million a year. So 50 million is sucking up a big chunk of the resources. Not that I don't think it should. It's just to draw home the point that you can't get to those numbers without changing the other team's budgets a little bit. And so, you should recognize as people pitching these organizations that is happening in pretty much every organization. The other thing that I think we're seeing, and especially on the DFI front, is this, there's less sort of preponderance to bring in new concepts right now than there were in the past. So, a lot of the DFIs that, the conversations we're having, it's basically saying, how do we double down and support the current portfolio? How do we really, really back the relationships we've got already in there? Whereas, in the past, they'd be more open to sort of expanding and thinking about new partners and all those kinds of things. So it's a tougher pitching environment. And then the last one is just pure capacity, right? Like my job was all the things that I've described before. And now I'm also on COVID working groups, and I have to build out a COVID investment strategy, and all that stuff takes time. So it's kind of like the attention has been completely shifted. And I think that there are big dramatic consequences to that as well down the road. Like we need to stay on course in some ways, but we also can't not respond. So I think you're going to see all that kind of stuff. And then the last one is you're seeing a lot of the, the investors from the foundation community, the program related investments, shifting their terms, right? Doing interest forbearance, forgiving loans, all kinds of things like that. And absolutely, you're going to see some of that out of our own portfolio as well. But the thing I would say as well is it's entirely, as we think about sort of what is a COVID strategy, it's entirely possible and acceptable to pitch and say, listen, this is really important, and it's important not to completely lose track of this goal during COVID. So one of the things that we want to say is, COVID investments should include direct head-on response and recovery and resilience building investments. They should also include things that we think are going to lose funding dramatically during this time and are at risk. So you have to be a little more creative in how you pitch right now, I think, and get people's attention, and perhaps a little more patient than normal. But, those resources are still going to go out the door.
I can add to what Adam has said. So I agree with everything he said. I think more broadly in the market, in the immediate term, there are a lot of resources being deployed to the immediate humanitarian response from the COVID-19 crisis, as they should be. But I think slowly the focus will also turn to economic reconstruction post-COVID. And from our perspective, that's where the strength of blended finance really lies. So especially for folks who are structuring and fundraising right now, I think the question is, how do you respond to the economy that is going to be there post-COVID? And how does your particular structure also respond to it? And it doesn't have to be a specific health-focused intervention. It can be a broader market building intervention. And I think that's useful to think of. And also, it may need pivots in the structure that you are proposing. So if the structure that you were thinking of launching, it was really relying on an anticipated growth in some market, and now you think that the growth is not going to be there, how can that same structure be used to stabilize the markets? And maybe that is something that is really critical. So I think the approach can't be, let's write this out and do the same thing again in 6 months, but there has to be some thinking done around how whatever the instrument you're proposing is going to respond to this crisis as well.
Mm-hmm. Great points. And maybe just some parting words here, and then I promise I will let you guys go. Thank you for giving us all of your time. Given the current situation, and just what you know in general about your organization's grant making process, what can some of our prospective grantees be doing right now to help put themselves in the best position possible to receive a grant from either your organizations or some of your peers? Aditi, maybe we'll start with you.
So with respect to what you can do right now, the two funding windows that we have open right now are the ones that are on our website. Those funding windows continue to remain open. We are looking at extending deadlines and such because of the crisis, recognizing that institutions have just simply lost time during this period, but we will be continuing to make grants under those windows. We might be adding an additional resiliency or reconstruction lens as we evaluate those proposals, but those windows continue to remain open. So, please feel free to reach out to us as you're thinking about different concepts and proposals.
Yep, I'll jump in. I think there's maybe just as a quick parting word, I guess. It's a lot of things. I think getting to know the organization and really understanding their perspective, and sometimes that's just their own grantees. What are the types of grantees in the portfolio? What are they working on? Maybe get to know some of the folks who have worked with them. That's always helpful if you want to prep for, funding window. We're always on a rolling basis taking projects. So, there's no need to hold off necessarily if you're ready to go, but there's also a moment of momentum in saying, listen, here's where we are, and we think now is the right time to fund, and this will be enough to make the decision. We do fund very early stage at times. But it's always helpful, if you're close to getting support from someone else to get a little bit further in that conversation, whether that not necessarily financial support, but otherwise, or endorsements, or those kinds of things. And then, even if we just think about the broad moment right now, it's recognizing the sort of COVID-19 lens that's put on everything. If there is a connection point, even if you say, listen, a goal was not COVID-19, adding that in and preparing that for the conversation is helpful. And it's not necessarily the route that we'll take in terms of why we fund or don't fund. But I can tell you that if I pitch something that says COVID-19 on it internally, it gets reviewed within a day, in the upper echelon. And if I pitch a regular project, it takes a couple of weeks. So you can imagine that just creates a little bit of an incentive for me to at least explore what those angles are. So note that question is coming at the moment.
Thank you both. Rob, I will hand it over to you to wrap up.
I don't have much to say other than thank you to everyone who presented, and thank you for everyone. We had over 55 people log in, so thank you to all our alumni, including the people who stuck it out for the extra Q&A. So as Lee mentioned, we will be following up with communication after this, the slides, some answers to questions that weren't asked, some of the references that Adam and Aditi mentioned during the presentation. And we will also be communicating with all you on an ongoing basis about additional opportunities